How do we make money from investing in property in the UK? Many landlords are struggling to make that profit. People like myself that were making good profit went to making zero profit. Hey, so today I'm going to do something a little bit different. It's something new for us. I'm going to do a slightly long format video, so do let us know if you like it. But the topic I really want to get into is how do we make money from investing in property in the UK? Now, I think that seems a bit strange because, first of all, it's widely regarded that people make a profit from investing in property in the UK. However, I speak to many landlords, and many landlords are struggling to make that profit or to make gains from property investment. So how do we go about doing that? How do we make sure that we minimise the risk, maximise the returns when it comes to investing here in the UK? So I just want to go into key sections around that in a little bit more detail. So I think most people would assume that investors in property are very wealthy and lots of money, and you get a lot of press around landlords, kind of slum landlords making a fortune, and people struggling to pay their rent, etc. And there's a lot of media narrative around that, even to the point where the government use it as ways of winning elections by what they're going to do with landlords. However, in reality, and in my experience, there are many landlords that are not some landlords that are working incredibly hard for their tenants, making wonderful properties for the tenants and still struggling to make money. So why is it assumed that everyone makes money? Well, I think there's a couple of factors. I think there's one element of this that comes down to baby boomers. So don't want to slam them at all, but the reality is if you bought in the 70s and 80s, you bought property, you've made a heck of a lot of money wherever you've done that in the UK. Even early 90s, you've made considerable amounts of money. And so they often are wealthy. People who just bought one or two properties at that period of time have become incredibly rich in that period of time. However, there's still a huge number of new investors that people investing this week, today, last year, in the last 5 years. And all of those investors have come into it with the aim of obviously making money, but with tax changes and regulations, it's becoming increasingly harder to make a profit. So I think that's one assumption, that people assume that these landlords and property investors are incredibly rich, and that's not necessarily the case. We work with people who have substantial cash savings, 30, 40,000 pounds, but they're certainly not rich in the grand scheme of things of people across the UK. These people will work really hard to save that money up to then try and make a better life for themselves or a better life for their future selves. So I want to make sure if you're in that position that you also maximise that return that you get. Now, I also want to go into a second factor, historical price growth. Now, this is one of the most wonderful things about property. And if you can hold property for a long time, the likelihood is that if you've bought it in the right location, you will do well from it, as I've just talked about with the baby boomers. So for people like ourselves and people younger than me, or even slightly older than me, who are looking to invest in property, then there still is that absolute long-term benefit. We're looking at 10, 15, 20 years, then capital appreciation will take place. If we look at how the market in the UK has evolved over periods of time, we do see there are peaks and troughs. And at the moment, we've got good growth, on average 2 to 3% across the year, and different cities and areas perform better than that. We've also got some areas actually in decline. So if you look at central London, that's in decline at the moment. So it's not a universal growth. And that's a sign of the times. What we'll often see is growth around London is early on in a cycle, and it slows down towards the end of the cycle where other cities that get to grow. So the likes of Manchester, Liverpool, etc. are the ones that are performing particularly well right now. So again, we have this assumption that everywhere grows, but if you're a London investor that's just bought recently, you're probably feeling the pinch right now, especially because yields aren't particularly strong here. So another thing that the media and everything spins, that forever growth, now it's not always a linear line, so we've got to factor that in when we're looking at investments. Social proof. I mean, there's many people like myself and many others out there that have invested and been successful through investing in property. And often whenever you hear someone is investing in property, you again assume that they're wealthy or they're making lots of money, just because by their nature, properties are expensive asset classes. So we assume that people are making money. So I think that is that big common belief that people do believe that property investors are making lots of money. But now I want to go into the reality check. This is the reality of investing in property. So the first thing that's massively changed and has started to impact people's profits is how you have to structure your investments. Now, if you're like me and you started kind of pre-2016 investing in property, you most likely bought properties in your personal name because it had no impact. Unless you had a huge portfolio, it just made sense you buy them in your personal name. It reduced your mortgage payments, your interest payments were significantly lower than that were in the limited company. So it just made sense to do so. So the downside of that is in 2016, the UK government changed the law so that you were taxed pre-mortgage payment. Now I could do a separate video on that, but fundamentally it meant that people like myself that were making good profit from that property portfolio went to making zero profit. And in fact, in my case and in many investors' case, we were making a loss. On one property alone, I was making a £5,000 per year loss purely because of that tax change. Now, the really tricky thing is you can't really just all of a sudden swap those companies from your personal name into a limited company. You have to go through a process. You basically have to sell it to a limited company and pay tax again. So it's left a lot of landlords in a really tricky position. If you've invested since 2016, the general advice has been, if you're going to build a portfolio and you're a relatively high income earner, so you're on the kind of £50,000 plus market, then you absolutely should be using a limited company to invest in property. So that again is something to think about. How do we overcome that challenge? The other thing that we want to look is a lot of costs are overlooked. Now, let's say you've got a property in Manchester, you're renting it out for £1,200 per month, which is a considerable amount of money. There are still quite a lot of costs that are associated with actually running that property. For most landlords, the majority of them are going to be paying a mortgage, and that will be a substantial amount of money. That will eat into at least half, if not more, of that rental income. You're then most likely going to have a management company, so somebody who's going to be looking after it, and they're on average 10% plus VAT of the management. So immediately you're going to be losing £600, let's say, on your mortgage. You're going to be losing another £150 on your actual management cost. So we're going to be losing that aspect of it. So we're already at 720 out of your kind of 1,200 rent. We then will have other costs that we need to factor in. So things like our maintenance costs, or even just a tenant fine fee. Agents might actually put a charge to you on a monthly basis, but they'll also charge you to find that tenant and setting that tenant up. And that could be another £500 cost to that year, to that annual cost. And then we've got maintenance. Maintenance is one of those things that sometimes it can be great. You've got a really low maintenance property, but 9 times out of 10, things do go wrong. And it's your responsibility as the landlord to absolutely withhold a good standard of property. And so you then find that you're paying that. Now, I often assume it's another 10% on a monthly basis that could be going towards the maintenance, as long as it's nothing major like new boilers or new roof. We can pretty much assume that. So again, another £120 going in there. So after all of those costs, you can see you're at circa £800 to £900 and you're making about £300 of profit every month. So you're making about £3,600 a year. And that's a great amount of money to be earning, but it's certainly one property not going to make you rich over that investment period of time, over a year or even a few years. So really you have to then build up to a portfolio for that start to make sense from an investment perspective. On top of just running the property, many councils now have introduced licensing of some sort, whether it's just a buy-to-let or a HMO. There is often a license in many of the major cities, and there's also restrictions of how you rent it out, how many people you can rent that property out to without a HMO license. And then actually getting a HMO license now with Article 4 directive is incredibly tricky in many cities. So you've also got restrictions. For example, in Liverpool, it's about £680 for a 5-year license. You've also got to submit all your documentation to prove that you are being a brilliant landlord, rightly so. But again, it's just factors and costs that you've got to factor in to the running of your property. If you're then in a leasehold property, service charge can be astronomical, especially in large blocks of flats where service charges are completely out of your control. If something goes wrong, you've got to pay to maintain that block of facilities, whether that's just as simple as a lift and communal hallways, etc., all the way through to if you've got a high-end apartment there might be gym facilities, there might be concierge, etc. Those costs can really add up, and often they add up over time. So when you start off, it might be £1,500 for your service charge, but quite quickly that can be coming to £3,000. Again, that is the reality of actually investing in property sometimes. One of the things that I really want to do is go through how do we start to overcome some of those challenges, but also how do we look at the bigger picture to make sure that we're setting ourselves up for the long-term capital growth. So I think a few things. Where do people really get it wrong? I think some people get drawn into top line numbers. They get drawn into yield. That's a 7% yield, 5% yield, 9% yield, and you don't do the due diligence, the detail that you need to get into to really look at your numbers. So as in the numbers I've just ran through, really it's like, actually, how much is it costing to buy that property? Your stamp duty, legal fees, mortgage broker fees, mortgage setup fees, a survey if you're going to be getting a survey. All of these things come into the cost of buying that property. The other things we've then got to look into is the cost of running them, as we've just gone through. Your service charge, your management fee, any maintenance costs, etc. You've got to work all of that out and then work out how much profit you are going to be making at the end of each month and each year. And by doing that extra level of detail, it's going to set you up to make profit and be really transparent. So things like your insurances, how much is that going to be? How much did it cost to manage the deposit for the tenants? Because you've often got to pay for a fee for that. So you really want to go into those details. Now we can help you with that. If you want to reach out to us, happy to share with you kind of our Excel sheets that we run. Other costs that are even outside of the property, just for the fact that you've set up the company, you've got to pay accountant fees that will then have to submit on an annual basis, so that they're costs that you have to factor in to your overall profit. Which is why it's often very challenging from just one property to make a substantial profit, because all those costs are just put on the burden of one property. What we say here at Pearl Lemon Properties is really you need 2 to 3 properties within a company for it really start to make a good profit out of it, and you really want to grow your portfolio from there. I think the other thing is people are often expecting quick wins, trying to get below market value deals, and we'll make £20,000 profit just straight off the back. And that is possible, but I think what's also really important is looking at the long term. Yes, you might have managed to get that property for £20,000 below the value that it should have, but why? How have you managed to do that? Why are you doing that? Is it in the right location? Does it have strong investment fundamentals to make sure that you can make a profit off the back of that? So again, it's our due diligence in the actual property itself and the location, and not just looking at the top line figures of it. I think what you've really got to do is see property much more as a business and a long-term investment growth business. It doesn't mean that you have to put lots and lots of time in as a day-to-day business, but you have to see it as a cash flow, something that is a cost and income, and running it like that, whilst also making sure you're on top of it on a monthly and annual basis. Now, each property, if you've got a really good property that is hands-off, that doesn't need any maintenance, it will take very little time to do that on a monthly and annual basis. And for me, myself, I spend 20 minutes each month looking through all of the numbers. I just literally go through, check that the rents have come in, check that everything's okay, and I've got brilliant management companies that help manage the rest of that, really. Again, on the accountancy side of things, I've got a great accountancy company that will help me through that. The biggest time for me is acquiring new properties, and that's mortgage applications and going through the conveyancing process. And that does take a long time, but it's well worth it once you set up a structure to do it and deliver a brilliant investment property. So to wrap up, what I really encourage you to do is don't make that immediate assumption that any property is going to make you profit. We see it all the time where people have bought properties that just aren't really set up to make a monthly profit. So make sure you do your due diligence, your research. Use a company like ourselves. We're a property sourcing company. We will help you find those brilliant investment deals that will make you a profit on a monthly basis. But also finding the right location, whichever city or town it may be that you want to choose, we can help you navigate that. But also, if you want to do it yourself, make sure you do that bit of research, the extra due diligence that's going to set you up for that long-term success in property investment. Now, hopefully you've liked this video. I really enjoyed talking to you about this. You can probably tell how passionate I am about this. So absolutely give us a thumbs up if you do like the video, and we'll hopefully do some more of this long content form.